morning, friends. Today is the 15th of Feb, and I'm Shuchi Rungta presenting you with the morning market update. Well, friends, Nifty yesterday closed back at the upper end of the range at 17,930. It closed just at the averages, and the daily MACD is already in the buy mode since a week. On the short term 75 minutes charts, the index continues to gradually make higher tops and higher bottoms. So the question is, are the bulls gaining momentum? The answer is no, not yet. The point of concern in yesterday's rise was the participation. The broader participation was absent. The advanced decline was approximately 1:2 in the Nifty 500, where 327 stocks declined vis-a-vis 127 advances. It was three main stocks yesterday, Reliance, ITC, and Infosys, which contributed to the increase in the broader index. On the option chain, 18,000 strike call writers still stand strong, where we have also seen some significant put writing at the 17,800 and 900 strikes. Coming to Bank Nifty, it's still trading within a range, and a move beyond the 41,900 to 42,000 will only get back the bullish momentum here. Yesterday, the US inflation data was released and it rose by 0.5% in January on month basis, with annual inflation to 6.4%. This is in line with the overall ongoing market dynamics. The US indices ended flat in a flat note, with overall chart structure remaining strong and same as before. The dollar index is consolidating at 103 levels, and India VIX continues to remain at the lower end of the range. SGX Nifty is 50 points down currently. So to conclude, we need a proper close beyond the budget candle high and the 18,000 zone for any bullish momentum. Markets are still trading within the 17,600 to 18,000 range. Levels to watch out for the day: Nifty support will be seen at 17,800 and 17,720. Resistance 17,970 and 18,000. Bank Nifty support will be seen at 41,235 and 40,650. Resistance 41,750 and 41,900. Thank you.